Well, welcome out to Tackle Trading's halftime report for July 10th. This is PAL Day, right? Are we calling this PAL Day? Fed Day?
Yeah.
Right?
Yeah.
PAL Day Wednesday.
That literally is the only thing anybody is focusing on in the market. I want to get Gino and Noah's take here. We got a full crew here for you guys for the halftime crew. Coach Gino, Coach Cody, Coach Noah, and myself. We're all here to walk you through what PAL stated and what the market response was and where we think the market's going to go in relationship to what we saw with PAL today. First, I'm going to start with Coach Noah. Noah, how are you doing today, buddy?
You know, I'm fantastic. Besides the fact that my camera's not working, I'm awesome.
It was entertaining watching you try to fix it, though.
Yes, it was.
Yes. You've watched a little bit of Pal's testimony today. Noah, what was your initial takeaway here on Pal's testimony?
Well, my thought was I'd love 60 minutes with Powell where I could ask him tough questions instead of, the patsy questions he's getting asked.
They weren't tough questions.
They were not tough questions. But it's interesting because I think it's a foregone conclusion that they're cutting rates, obviously. And my thoughts are, well, I mean, he, definitely laid out the fact that there's economic slowdown, that, things are not as awesome as certain pundits would have you believe. But I think overall, we all know that, the old story, don't fight the Fed. And again, I mean, he's just Powell playing Powell. But I didn't find anything really particularly shocking or anything, out of sorts with his commentary. It was all kind of as expected for me.
Well, what was interesting for me, and I have a few takeaways here, but what was interesting for me was they should have been asking questions on monetary policy and Fed policy stance and economic projections. But what I found, what was fascinating was the individuals in Congress were more asking about political situations than they were about anything from an economic perspective. But I want to read you the key statement that was released earlier today that really kind of drove the market, and then we'll kind of look at the market. This was an excerpt from his written statement that was released this morning, and I believe it was released at 8:30 a.m. Eastern Standard Time. And as I read this statement, will you drop this down into a 30-minute chart, Noah, and show kind of when this statement was released, exactly how the market responded to it? But the excerpt read as this: in our June meeting statement, we indicated that in light of increased uncertainties about the economic outlook and muted inflation pressures, we would closely monitor implications of incoming information for the economic outlook and would act as appropriate to sustain the expansion. Many FOMC participants saw that the case for a somewhat more accommodative monetary policy had strengthened. Since then, based on incoming data and other developments, it appears the uncertainties around trade tensions and concerns about the strength of the global economy continue to weigh on the U.S. economic outlook. Inflation pressures remain muted. He was then asked about the very strong unemployment report because, again, he's talking about this data. He says that did not change their stance. What was the market response, Noah, when that excerpt was released at 8:30?
Pop, look at that. You got that right there. Little spike in the volume and off to the races. So,
well, and I think that's what the market was really kind of waiting for. Everybody in the market was expecting a 25 to 50 point basis reduction in the overnight rate that the Fed has. And that was the confirmation we got, guys. I mean, that's what I said on Monday. That's what I said yesterday. I wanted to wait for the confirmation, and we got it today, guys. Couple takeaways, and I want to get your take on it. Fed's going to reduce the rate by a minimum of a quarter point. Some people think it's going to be a 50-point reduction. Gino, Noah, where's your head at? Are we going to get quarter point? Are we going to let's put it out there? Quarter point or 50-point reduction?
Go big or go home, bro.
Think we're going to go 50?
No, I think it's going to go quarter point, but go big. Yeah. Might as well go big.
No, please no to 50. That would be too much.
I think that would spook the market, quite frankly.
It would spook the market big time.
It would spook me.
Because that means they're proving that they're behind the eight ball. That means they're proving that they're late to the party.
Well, yeah. Let me get your take on it, Gene.
When was the last time they moved it a half a point?
Oh Lord,
2008.
Did they move it? Was it 8?
They did the two biggest back-to-back rate cuts.
That's right. It was 50 and 75.
And they did a 75.
So,
yep.
That's right.
So,
they did.
that means they're trying to play catch up when they do it too.
Well, and guys, that was late 08 too.
Yeah. So I mean, remember when what's the guy? I forgot his name. What's his name? The guy looked like
Bernanke.
Bernanke. No, before him.
Oh, Greenspan.
Greenspan. That guy was in the .com. He was doing that. He would literally move it a quarter point on the meeting date. A week later, move it a half a point. It was like, okay, you really lost grip of the economy.
Well, he learned from Volcker, who would go up 10 basis points, like literally, like in one meeting, and the next meeting it's like, oh, let's reduce it by 4, and then the next meeting let's increase it by 12. But that's obviously not the world we live in the 80s and 90s, where we had Greenspan and Volcker adjusting rates fairly aggressively, both up and down in the rate cycles. This, over the last 10 years, they've been very consistent. If they do reduce 50 basis points, guys, the market response should be what? I think it's down.
Well, yeah. That would spook the market. That would spook the market. But here's the deal. If you can move it a quarter point, it's supposed to pan out for 6 months before they make an adjustment. If they start moving at a half a point, or even think of moving it more than that, you're going to see them moving it before the meeting, because they're not going to wait. So when there's half point moves, they do what Greenspan, like I was saying earlier, he would move at a quarter point now because he thought, well, on the meeting, we'll move at another quarter point, just not to spook the market so much. But here's the thing that really spooks the market is if they don't move it during the meeting, or if they do move it, it's when they move it when there's no meeting. Imagine waking up today and all of a sudden they decide to lower the rate just out of the blue. That's what really
that's 10% down in a week.
That kills the market. Even if it's up or down, it scares the market, because they're like, why are you guys surprising us with this? And what's the urgency? Are you really trying to, because they're trying to play catch up.
Yeah.
And once you know that they've lost grip, it scares everybody.
No, now that we understand exactly what the Fed's going to be doing here, I think they did remove any uncertainty. Would you agree, Noah?
Yeah, I mean,
it's baked in at this point. And I think all of us expect that 25-point reduction in the interest rate. Give me your technical read on the market from the response, and now from a current perspective, what you read on the market.
Well, my technical read is that the S&P will never go below 3,000 in my lifetime. No, just kidding.
29.96. So.
Yeah, no doubt. No, it's breaking. It's so look at this. Let me zoom in on this a little bit here. And one of the things that I've been watching, a little bit concerned about, is a little bit of rising wedge action on the market. That's just kind of slowing momentum, but it's poking its head up to those new highs. I mean, it poked up to the all-time high today. So, thanks to the Fed, we hit the all-time high. And I think some of the subsequent, comments and whatnot came back, and the market got a little bit loss of enthusiasm, but it pulled back and it's found some buyers. And so I think at this point in time, it's like water off a duck's back. The market's probably going to shake this off. And I think they're going to look to that certainty of the rate cut. And I suspect it's going to continue to rise, but that rising wedge gives me a little pause. And anytime, this is for me, just like market at all-time highs, buying into this is kind of hard when you look at it from a fundamental perspective. And again, me being a bit of the perma bear that I've always been, it's hard not to look at every little sell-off as like, oh, here it goes. And I watch, people panic over the little 2-day drops like you saw yesterday, and all the bears like, oh, here it is. This is the top. No, I don't think we're at the top. I think we're going higher, but I don't like the fundamental underpinnings. So that means I'm suspect, which means keep insurance on your portfolio right now while the volatility is not crazy high. And watch out. July historically is one of the best months for the market. It's just seasonally, it rocks. August, September, as we get closer to fourth quarter and economic forecasts and like expectations on retailers, et cetera, start to get baked in. And that's when the institutions start deciding whether or not they're staying in or pulling out. So September, October, are rough months, and it starts in August if you're going to see a sell-off. But for now, I saw a headline this morning, totally non-related. They're doing the running of the bulls in Spain right now, and they've gone 3 consecutive days without anybody getting gored. So that's a headline. It's not a headline when people get gored. It's a headline when people don't get gored. So if you're running with the bulls, just be careful. They have horns.
I was wondering where you were taking that.
Because they introduced rodeo clowns out there, or no?
Oh yeah, rodeo clowns. At least try to avoid the bulls. You don't have to outrun the bulls. You just have to outrun the people behind you. So it's showing some strength there.
Before we get into the commodities and how it impacted the commodities, where the biggest movement we saw in the market today was not the S&P, but it was the dollar. Can we take a quick look at the dollar? And Gino and Noah, I want you guys to talk about what a decreasing interest rate environment does to the money supply and typically what it does to the value of the currency.
Well, I'll let Gino add to the commentary, but look at that big bearish engulfing candle. Clearly the rate cuts, the market's not looking at that favorably for the dollar.
Before you look at the intraday, I'll just let you guess. At what time did the dollar start going down?
8:30.
On the dot. Drop that down into an intraday time frame and you can see it really, really clearly. You obviously broke intraday support levels here on the dollar and you're showing a little bit of a fade action. When we're seeing a decreasing interest rate environment, typically that increases the money supply. And as we increase the money supply, well, what do you see? You see currencies have to go down because the value of whatever it is, whatever product we're looking at, the value of a good or a service, the value of a commodity, the value of a currency, it goes at what is the rate of supply and demand. And if you have increasing supply based on increasing borrowing power, the dollar should come down in that situation. But given that we only have 1 day's price movement here, Noah, a lot of volatility over the dollar over the course of the last, 2, 3, 4 months, does this impact the trend of the dollar? Or is this just stuck in some degree of neutrality?
Well, I mean, yes, you could argue for both. The fact that it's made 2 consecutive lower highs, and 2 consecutive lower lows, that seems to be a little bit more bearish, but you're still stuck smack dab in between some hard resistance out at 98 and support at 95. And even some support at 96. You've got support and resistance zones. You still have a rising 200. You're up above your 20 and your 9, but you did cross down below that 50 today. So I would say at a minimum you're neutral, but I do think that lowering interest rates on the dollar isn't great for the dollar, but I don't know that the other fiat currencies are going to really be operating from any sort of posture of strength at all.
Well, we saw Canada come out today, right? The Bank of Canada announced monetary policy, and they kept their fund rate to right around 1.75 to 2%. They obviously cited a little bit of slowing growth, very similar to what Jay Powell talked about earlier today as well. In terms of, Gino, I want to get your take on this. Gino, you've been trading since the late 1990s. You've been in the market through Greenspan, Yellen, Bernanke, and now Jay Powell. You've literally been a trader for 4 central bank presidents. Gino, how are you going to approach the market now that we basically have the confirmation we're going to start lowering interest rates in July?
Well, it's going to be a technical focus. Number one, right now, believe it or not, you got to put fundamentals in the back seat, because look at how big the move was just from an announcement. It wasn't based on economic numbers. What I mean by that is this. Why are they lowering interest rates? Because the outlook for the economy is slowing. So why in the heck would the market go up? And if you think about it, it's an oxymoron, right? So you have to look for your sell signals, which brings me to a big public announcement. Anybody listening to this, right now is the best time, actually tomorrow or the next day. Check your 401k or your mutual fund. If it's not at an all-time high,
get rid of it.
Something's seriously wrong. Because if the market gives a sell signal, you're going to see it a heck of a lot worse. So number one, right now, you should be close to an all-time high. You should be impressed when you open up your envelope every month and go, wow, look at this. But if it's not, there's something wrong with your money manager. There's something wrong with the fees you're paying. There's something wrong with your financial plan because you're listening to this and losing on your retirement. So if you're listening to this, guys, look for that sell signal. You should be hitting. Now, if you're outperforming the market, great with your 401k or whatever, that's great. But have a glimpse at, like, maybe move to cash when you do get the sell signal. So I'm sticking technically bullish. I just went through everything. And I'll tell you, Matt, everything right now is bullish. What I'm going to look for is the trickle down effect on the world markets, international ETFs.
Well, a couple things to that, Number one, I love the advice, right? I mean, if you're ticking all-time highs in the S&P 500, the NASDAQ, close to the Dow Jones, if you're at those all-time highs, then you're funds are not at all-time highs as well. You're underperforming the marketplace. And if your mutual funds in your 401k are not up, what is the S&P up year to date, guys? 15%, 16%?
Oh yeah.
If you're not between a 15 and a 20% return in your retirement account this year, you should fire your financial advisor and just buy the S&P 500 itself. So so I love that advice, guys. And if you did like Gino's advice, Tim and Cody would kill me if I didn't ask for a like and a share. So make sure for the halftime crew, knowing me, I was not going to get that in, but make sure you give us a nice little like and share. That helps us get the word out for the halftime crew and the
Yeah. By the way, Matt, real quick, the S&P as of Friday was up 19%, NASDAQ up 23%, which, by the way, I talked to a lot of professionals who are retired, and they actually, believe it or not, are moving to cash because they feel like if you get a good 20% or move or more, which is unprecedented in the market at this time, halfway through the year, they take it and they start moving you to cash. So the good money managers are starting to put less in the market and more into cash.
Well, I wanted to get your take on that, Gino, because you mentioned when you were talking in your PSA, you said you're waiting for the sell signal, right? At all-time highs, you're not getting a lot of sell signals. You're still getting buy signals. Right. What would that sell signal be for you from a retirement perspective, mutual funds, ETFs, in an IRA, 401k, whatever the type of retirement account is? What would you have to see for you to be like, maybe I need to go to a little bit more of a cash position?
Yeah. So a technical read would be major levels. Like, are we going to hold this 3,000 level? Are we going to break down? I personally, my long-term accounts, and I have retirement accounts myself, I don't do as many adjustments, and some of them restrict you from doing a lot of adjustments. Like my wife's retirement account, she can only do like one adjustment a month. So your hands are tied into like 5 maximum a year, which is ridiculous. But here's the deal. You got to have a sell signal somewhere. And, and there's different financial plans. Like the older you get, the safer you want your money. But where's your trigger on the chart? So if Noah looks at it weekly, where would you put that on the ES?
Yeah, let's drop this into a weekly chart very quickly. Let's get a little broader perspective here.
It's still up there. That's kind of looking like a cup and handle breakout, don't you think?
It's what it looks like to me. I mean, if you're just looking at this on the weekly chart from a trend pattern perspective, kind of just highlight the last couple of years there, Noah, so we can zoom in and really kind of get an identification here. But if you're looking at that just in terms of the pattern, you're looking at a continuation pattern after 9 years of price appreciation with a cup and handle breakout. And for me, as long as you maintain above those weekly resistance levels, kind of what Gino was talking about with those technical triggers, for me, as long as you stay above those weekly triggers, maybe that's 29.50, maybe that's 29.40, you got to be some degree of bullish here.
Yeah, I'm thinking there's no reason for it to get below 2,700. You see the 2,700 level? There's no and then, by the way, that's 10%, right?
That's a 10% drop. I mean,
so think about it. That's a normal pullback, 10%, but now you're below all the moving averages. You're below support. You're a ways from 3,000. Something happened to make it drop 10%. You start getting moving average crossovers, and that's why some of these big money managers I've talked to, they feel safer when you get to new highs. Number one, not because they got a sell signal. What are they doing? They have no problem telling a client, hey, you're up 23% this year, and not having to manage the money the rest of the year. You know what I mean? And even if you underperform the market and it does 40%, most people are pretty happy with 23. And they're not
I get that, Gino, but I was talking to Jack Schwager the other day on the podcast, and we were talking about and I don't know if this made it into the podcast. We might have been talking about before we started recording, but I asked him the question, what separates the greats from the good, right? From the average investor to the people that make those epic stories. They don't accept 20%. They want 60. Right.
They're swinging for the fence.
Yeah, they're swinging for the fence. And I'm not saying let's do that with a 401k. I'm just,
that's your good money managers. Those are the guys that say, hey, I'm trading your account. Most of them are very inactive, especially on retirement accounts. They just want to protect your money and not work hard, And so they're like, hey, let's lock this in. They're not buying puts, by the way, to protect your account on most of them.
No, they're not. I do want to get into Stephen's question here. Stephen asked, what do you guys think about short ETFs, inverted ETFs versus bonds instead of a cash if you're not allowed to move to cash? Stephen, I'll answer that very quickly, just in terms of my opinion. When you're dealing with the bond market right now at 2.25 to 2.5%, and we're only projecting one interest rate decrease. But guys, I want to get Gino and Noah's take on this very quickly. Would you be shocked if we only get one interest rate decrease here? No, you're on mute.
Oh, I am on mute. And what I said was brilliant. No, I wouldn't be shocked, actually. I think that would be kind of best case scenario if they only do one rate cut and then the economy they see pick up and some of the things that they see that are warning signs for slowdown.
I mean, even watching Powell's testimony today, he was talking global economic problems and inflationary targets and not being able to be hit, and how even with GDP at 3%, at worst case mid twos, and unemployment at 3.6 to 3.7%, they're still going to be cutting rates. I don't see the Fed starting to reduce rates and then just in August say, no, we're kidding.
No, I'm saying that it's just best case scenario. Like one shot cures all. I doubt it though. So I think that you're probably going to see a couple rate cuts. And I think ultimately, I don't know if you can stave off, the global economic correction. I mean, I don't know, other than going to full blown inflation.
Rate decreases is not going to cure Europe's and Japan's and China's problems.
No, or America's problems for that, for that matter.
Or America's economic. I agree with that. But my point in terms of asking the question, Stephen, is if you can get a bond around 2 to 2.5% right now, and I mean, that's pushing it, but if you can get a bond there and they start their lowering of the interest rate cycle, and we get not one, but two this year, maybe even three this year, followed by a 2 to 3 next year, as they start getting into that 1% type interest rate environment, those bonds become more valuable, Stephen. So if you do not have a cash type position in a 401k, which I'm most likely assuming it is, Stephen, then a bond does become valuable in that situation. That's the only thing I was trying to get at. Let's move on to crude oil very quickly here. Gino, I want to get your take on crude.
Yes,
you have the insiders, you have the intel.
No.
Give us the intel. What's your read on crude?
Well, look at that setup today on CL. Look at that. I mean, that is a cup and handle, right? Look at that. So what this does is, you see a big cup there. We got a little overhead resistance. I got a long spread on this in the futures, and I'm way out of the money, so I needed to move. And I'm hoping that it'll do it because I did very little risk trade on this one. Depending on the dollar, if this goes down because the rate cut, look at oil, look at this breakout. And looking at the entire market, I looked at, over 80 different indicators. I looked at the spiders, the sectors, the industry. Everything's green today. Everything's near new highs, except one sector that's got my eye that's related to this, XLE energy. So if this breaks, check out the inverted head and shoulders on energy. So if this breaks out, check out your energy stocks right now. There's a lot of good setups in there. But again, a lot of overhead resistance. So you see that inverted head and shoulders? That's what I'm looking at. I'm looking at oil breaking out and taking this sector higher. This is the lagging sector right now. You guys said, there you go. Inverted head and shoulder, a lot of overhead resistance in there. So if I'm a spread player or a target, I'm looking at the 68 on this at the high. So I'm trying to get a range in there. There's a lot of moving averages, a lot of overhead resistance, but a breakout on crude oil could push this higher. It's the only major sector lagging. And that's what I'm looking for as something that's not topped out yet. Other than that, there's a lot of setups in these stocks too.
Let's come back to crude real quick here, guys. Crude is forming a fairly significant technical formation, in my opinion. If you'll come back to crude real quick there, Noah. There we go. And when you're looking at crude here, Noah, is that a higher low? You calling that a higher low?
Oh yeah.
Okay. So the question I have for both everybody here, okay, whether it's trading in the futures market or USO itself, the ETF that tracks oil, Cody, Noah, Gino, you trading a breakout of 60 on oil?
Yes.
I don't have a problem with that.
I am.
Not at all.
I am, but I'm doing a low risk trade out of the money.
So low risk trade out of the money for you. I'm assuming that's a 3 delta naked put.
No. Not that low of risk. I've already got those in. Yes, that was it was downtrending. On the uptrend, I'm doing vertical spreads, very tight vertical spreads to keep them cheap. Out of the money, above the target. They'll still profit because they have a delta. But
so 10, 15, 20 delta type bull put spreads.
I'm doing bull calls. I'm doing bull calls.
You're going a little bit more aggressive then.
Yeah, bull calls out of the money.
I
the
like
reason
it.
why is when you get a couple dollar moves on these, seriously, guys, when you do spreads on crude light in the futures, it's fun to learn it because you can do spreads for as little as $10 for a bull call spread, and the commissions are half the money. So it's about $15. So, it's like, I don't even call that risk in my account because I probably spend that much a day just on lattes. But, I'll do them all the time just to pick direction. And here's the thing. I don't want to miss the move. And it's a nice setup. I personally am a trend trader when it comes to directional. So I don't like cup and handles that have all that overhead resistance. But with the economic conditions behind it and the dollar, I can see this push through. So this is where, if you don't know fundamentals and economic conditions, you don't take a technical signal like this. But if you do go deeper, then you have the odds in your favor going, well, this could push through based on economic conditions. So it's a lot of people like, why go deeper than the chart? Why would you go into fundamentals? Why would you go into economic news? Why would you go into politics? Well, because you can see how that affects in the long run. Yeah. Like, when Powell texted me last night, I was asleep and I missed it. And he said, hey, Gino, double up on your 401k. I was like, why? It's not giving me a buy signal, but there's things behind it. That's like an insider. If an insider told you, hey, Matt, we're going to buy a ton of oil and it's going to go to 70. And you looked at the chart and said, well, I don't see that as a good signal. Well,
I'd buy oil.
You're not listening because the insiders know where it's going. And that's the thing is, you got to dig deeper into these politics. So what do you think, Matt, on your take on the politics, the economic? Do you think this will break?
In oil?
Yeah. Do you think this will get up to the 65 or 70 level?
From a technical perspective, from a fundamental perspective, obviously the news of oil today is fairly important with the news. And the news of today with oil is basically you had a little bit of it. You have that storm that's coming into the Gulf, and you had some oil pipelines shut down. And because of that, obviously a little bit of a supply issue really kind of drove oil up. On a break of 60, before I start thinking 65 to 70, I'm thinking 62 to 63, just from a technical perspective. But I do believe from the technical and a fundamental perspective, and it's like Coach Mark always says, guys, Saudi's got his back, right? Saudi's got his back, and you get a technical break based on some, positive news coming out of the Gulf for price appreciation on oil. Absolutely, I'm going to trade oil above 60. I want to see it close above 60 though.
Now, real quickly, can you go to the 5-minute chart, Noah, and check out the spike in volume
And while Gino does this, ladies and gentlemen, we're going to start rapid fire here in just 1 second. So make sure I see some symbols in there. Make sure you get your symbols in there. See if we can get it.
Look at that volume spike, Matt, on the news came out just in oil. Yep. Look at that volume. Look at the volatility.
That was the inventories.
Yeah, look at that. That's huge.
Well,
and then it recovered and it went back up. So
look at the far right of the chart. I mean, you got to love that bullish uptrend on the intraday. You got to love the price consolidation in the high base. And you're looking at a potential day trade / swing trade above 60 here. I mean, what's there not to like on that chart right now? But guys, that's enough for the market skyline portion of the halftime report. Gino, Noah, thank you so much for your analysis. Let's get right into rapid fire. And Cody, you want to play, Cody?
Oh, I want to play.
You want to play? All right.
Let's do this.
I'm gonna go Gino, Cody, Noah. Gino, let's go CHTR, Noah. CHTR. Charter. Give me your read, Gino.
Yeah, new high, bullish, broke out of a double top, triple top formation there. And let's see if it holds. It's expensive stock, credit spread type stock for me.
Ascending triangle after a consistent bullish uptrend. That's a pretty easy trigger. Would you agree?
Yeah, it triggered today.
Just depending on how you want to play it. Looking at the next one here, let's go with Marie and United States Still. Cody, give me your read on United States Still.
Well, I'm going to start with a joke that was said in the scouting reports when you weren't there, Matt. Is U.S. Steel Matt's new GoPro?
No, and no, it's not. That's number one, and number two, that can only be said when I'm not there.
All right, so I'm going to start with that. But obviously, United States Steel has been beaten up for a while. It did have a break on Monday of some. What are those? That looks like the 50 and the 200 to me, but that's not right. Those are just the colors I usually use. What's your green and blue lines there?
They're moving averages.
Thank you.
The blues are 20, the greens are 50.
All right, so when I'm seeing a break below
Cody's first day trading.
Oh my God, thank you guys. What are those? You knew what I meant. Anyways, I'm seeing this thing continue to the downside because of that break. U.S. Steel's definitely been bearish, continues to look bearish. And as a matter of fact, I believe we actually had it on the report as a bearish retracement to play.
And by the way, for your little jokes, I haven't been in U.S. Steel for a year.
So it can't be your GoPro because you were smart enough to get out.
Did you know that Tariff Man and the Man of Steel, if they got in a fight, who's going to win? Tariff Man.
Yeah, I got out on a negative earnings report from last year. It was last August, and I was just like, nope, broke key technical formations, broke fundamentals changed, earnings down. But I will tell you, Steel's going to have its day, and I will be in it when it does. And I asked, who was it? It was Pete Thomas from 2 weeks ago, the podcast from 2 weeks ago, and his opinion was very, very clear. Once that infrastructure bill is passed, that's when you get still. So keep an eye on infrastructure. If we ever get infrastructure from a political perspective, if our Congress can ever get their act together, at that point, then Still has its day. Let's look at the next one here. Let's go with Kronos. Let's go Noah, Kronos.
That's a consolidation of a consolidation. That's really pinching down, but the rising 200 period moving average certainly could help that out. I wouldn't really be a buyer until it cleared the overhead congestion in the moving averages.
Yeah.
And I could see it breaking down just as easily because that's pinched down. I mean, it's between a rock and a hard place technically, and it will break. The question is which way. It might be a good K trade.
Like it. Mark has a $14 put option sold on Kronos. Is he going to be successful here, Noah?
Well, if Mark sold the put option, I'm shorting it just for sure.
He's got like he has not had a losing naked foot this year, I don't think. And so he
was bragging about that yesterday.
Very
2 days ago.
Concerned about Kronos breaking his naked put streak on the boomerang trade. So we'll see. I'll make fun of him if it does it though. I'm kind of hoping it does so I don't have to hear him brag anymore. Let's go. Let's look at the next one here. Applied Materials, Coach Gino, AMAT.
Hey, Matt. Ooh, a nice swing low trigger today, right off the 20-day moving average. That's a trigger. That's a trigger. And today, there's a very little bit of resistance at 45.80, but depending on the volume, you might not be late to the party. I have a target of this one just above 49 here. So yeah, I like the trigger here. And if I'm late to the party and I was going to get in, I wouldn't get in until it breaks 46. That's me.
I'd love that candlestick relationship from the last couple of days. Noah, can you quickly speak to the last couple candles as we saw that confirmation start to form?
Well, I mean, it came down in a pretty orderly fashion, and you got a small body spinning top type candlestick right at the 20, and then you got a nice clear, clean engulfing. So you could have technically been triggered in yesterday. And if you're waiting for it to get back above the moving average, then pops today with some energy. Plus, one thing I really like about it is the volume on the engulfing, the candlestick there. You got a nice uptick in volume right at that 20 period moving average buy zone, old resistance support. That's a good technical confirmation.
It's a master trader type technical type situation that and that's why I wanted you to speak to it very quickly. Let's move on to the next one. And I got Noah. Nope, it's Cody's turn, right? Yeah, it's Cody's turn. Cody, let's go with Netflix, NFLX.
Netflix still stuck in that range, pressing the very top of it. I want to see it actually break above it before I can play it. This thing is better played as an iron condor or neutral type strategy of that sort than direction at the moment.
I like it. I read an article and I want to get you guys to take on it. The article was written by, I can't remember what financial company it was, but they said Netflix has concerns in the sense that they're going to be losing a lot of very, very popular shows. And Netflix over the last 10 years has built Netflix on basically them ripping off the networks and other, companies that produce television and movies. And they don't have the catalog to really kind of succeed on their own. If Netflix doesn't have the catalog to succeed on their own, and if other companies like Disney is pulling their stuff away, ABC is pulling their stuff away, NBC is pulling their stuff away, can Netflix really thrive in that environment, guys?
Well, considering that their two most popular shows of all time are Friends and The Office,
and they're going to lose them both.
They're going to lose them both. I think that is negative for them. And I also read another article talking about them. There's an idea of them doing commercial advertising on Netflix, which
that hurt them.
That would hurt them, because I think that's the one great pleasure of Netflix is the binge watch uninterrupted without the commercials. So I think that's going to hurt them. But at the same point in time, they do have an okay catalog of their own stuff. But I think they'd have to really expand that.
But it's not The Office.
Well, no.
But seriously, I don't know if I would subscribe to Netflix without The Office.
What's up, Mark?
I honestly don't know if I would.
Mark Curtis talking about his put play.
Yeah, we were talking about your Kronos $14 put option.
That's even better win.
We're rooting for you, Mark. We're there for you. As long as it's your money,
I like it. Mark, you're going to be joining us for rapid fire. Good timing on this. Let's go with Mark with AMD, kind of a little twin sister to his Micron love affair. What's your read on AMD, Chucky?
I don't know, man. I always just sell puts, cash flow this. It's coming up against a really significant resistance level.
I agree.
Like 34, 35. I mean, it tested clear back last fall, tested again a couple months, about a month ago, 6 weeks ago, testing again. I mean, this isn't the time to enter. If I owned AMD calls, I would probably be more aggressive in rolling those actually down. I would want to maximize it. I would bet that this resistance level holds. If it doesn't hold, sky's the limit.
I agree with that. Love the read on that. Coach Noah, let's go with Microsoft. And when we were asked in the podcast just this week, Mark played his game with us, the Dirty Dozen, and he asked us which one was going to be the number one market cap company in the world by the end of the year. I said Microsoft. Tim said Microsoft. Noah, if we get a breakout, it's going to be Microsoft. What's your read?
In full disclosure, I'm long Microsoft. So yeah, I think it's breaking out.
A lot of it are.
Does that mean I have to go buy some Microsoft now in case Noah makes money? Like, I refuse any of you to make money and I not make money. I'm going to do something with Microsoft.
Listen, everybody's made money on Microsoft in the last 6 months. It's been a juggernaut.
Yes. When I saw Apple start, losing some, and Microsoft wasn't showing any part of that, I was like, I'm going Microsoft. I'm not going to short Apple, but I immediately went long Microsoft.
Yeah, it was not a hard call. It was like Amazon, Apple, or Microsoft. And for me, Microsoft is just this company that doesn't get the headlines that the Apples and the Amazons do, the Googles of the world do, the Teslas of the world. But it's just that little train that never stops.
That's right.
Never stops.
It just never stops.
They're the company that's like, you know what, y'all can be in the media and have all this news and stuff flash around your stuff. I'm gonna sit back and make money. They're like, you can try to look as rich as you want. We're just gonna be quiet.
Honestly, guys, I feel there's an entire population in America that thinks Microsoft's AT&T for the last 30 years, and then missed out on 800 billion market cap gains over the last 10 years. This is an absolutely wonderful company, and it's not overvalued. I like that. I like the potential breakout here.
Can I go get my shares back that I got called out on when it was trading at $7?
No, just like I can't get my shares of Tesla back when it was trading at 40. Next, let's go to Coach.
It will be trading at 40 again soon. Don't worry.
Okay, I think that might be a little bit of hope there. Gina,
that might means we have to look at Tesla. I don't know about you, but
I'm not looking at Tesla today. It's ugly. Okay. Good luck trading that daily chart on. Well, that's not Tesla.
There you go. I got a little dyslexia going on there.
I was like, that's not as ugly, but there we go. Okay, Gino, you're up. Let's go with Cisco, CSCO.
CSCO. Okay. Oh, I like the setup on this. We got a resistance on today's high. Today's high, look at that wedge, the bullish wedge we have going. Whole bunch of W's in there. This is the market bringing up. When you see a pattern like this, it's only bullish because of the market. Huge volume on that down day. The huge volume on that down day. You know, dividend recovery day.
That was the fake volume day we had.
Oh, for the IWM reallocating everything. Yeah.
Yeah, that was but no, we've recovered. So this, you know, the push above 58 here would be pretty interesting for technical play. But again, near all-time high, it's bullish. I don't know, is this an all-time high? Let me see. We're going to week.
Most likely would be.
Yeah, I think that is an all-time high.
No. We got 90s.
Cisco was higher back in the 2000. There you go.
Wow. So check it out. If you we're waiting for it to break even, you're almost there.
You know, there's somebody who's praying for that, right?
I guarantee somebody bought in 99 and has held the whole time.
There are back holders from 99. Now, hopefully they rolled their calls down along the way. You know?
No, I don't think those back holders know how to roll a call there, Chucky. We got 5 left, guys. I'm going to go next with Cody. Coach Cody, let's go with W. Day from Stephen W. Day. Workday breakout. Is that confirmation for you, Cody?
No. The reason it's not is the intraday. It popped up and immediately came back down, and it looks like it's dojing, so it's not quite. I actually want to see one more day. So I'm being a little patient on this to see if I can get one more day to call it a breakout.
I like it.
Good call.
I like it. Yep, I like it. I was testing him.
Yeah, another example of like waiting to pass that first 30 minutes to trade, wait for a breakout of the 30 minutes. That stuff happens all the time on breakout.
That's true too. Wow.
It always comes back down and test. There's no doubt. Let's go with Coach Mark. Coach Mark, we got you with Oracle.
Boring stock, but that is not a boring chart. I mean, you go back to that. So we break out. This is a pretty chart. It might be a little running away, but we've had several little breakouts. You had a beautiful consolidation pattern form after earnings. Nice 6 days of sideways movement. That thing was beautiful.
Clear trigger.
Beautiful. It broke out of that, providing a absolutely fantastic trading opportunity. Now it's a little bit ahead of the game now. We don't have really good entry signals right now. You know, that wouldn't be pure momentum plays. But wait for another stabilization pattern. Great stock if it pulls back and gives you a nice bullish retracement. That's what I would be looking for.
Yeah, it's tough to chase that dragon, but
once again, a famous 1990s .com player. Noah, is this an all-time highs or not?
Let's take a look.
I'm gonna say no.
Yes,
back holders got paid off.
There we go. Back holders are up now.
Buy and hold does work.
Look at that old resistance from 2000 acting as new support in 2017 and 2018.
I mean, it got down to $7.
Work.
Wow.
Price has memory.
We got 3 left here, guys. Newmont Mining. Let's go with Coach Noah. Newmont Mining.
Newmont Mining popping up today. Kind of, nice bull flag. This makes me want to back out to the weekly. You got a lot of overhead resistance at 40, but pretty strong, and it's been again reciprocal with gold.
That's a trigger. That's a trigger on a short-term trade. But I agree with you. I mean, when you're what is this? This would be module 4 of step system.
Yeah.
One of the requirements in the step system is to always look left of the chart, and that's what you guys just did, or what you just saw Noah do. When he looked at the left of the chart, he's like, okay, I need to drop this down into a weekly chart to see what's over there, because I'm seeing a trigger on the daily. It looks on the daily like there's clear selling. You drop it down into that longer time frame of the weekly, and wow, that changes the analysis a lot.
Yeah.
Because I would not trigger here.
No, I wouldn't buy into this breakout.
A lot overhead resistance.
I'd buy a pullback if you gave me one, but I'm not going to buy in. You give me a break above 40, we'll talk, which is weird. Like, hey, I'm going to wait for it to get more expensive to buy, but you just don't want to buy into that. It's
You're
like
buying the strength, though. I mean, that's buying into the strength. There's nothing wrong with that. Let's go on to 2 left here. JD, let's go with Coach Gino.
JD.com.
Crude.com, one of my most hated companies in the world.
Well, you know what I don't like. This is what Mark was talking about. Is a bad trigger. See how that triggered yesterday? Actually, follow through today. So it got two people. Got people with the trigger above the yesterday's candle. Then it got people today, and now it's giving it all back. So I don't like the bad triggers. You got to go to the intraday chart and look at,
Yeah, this is what I call running the stops. Like everybody triggered in here, then it runs down, clears out all the stops, finds a bottom, and then thinks about going.
Yeah, and then goes.
Yeah.
Yeah. So now
listen, and grandmama, the 200 weekly has been acting as resistance on the stock several months ago and again last week. That 200 weekly has slapped it down every time. Grandmama doing her job.
Grandma is taking revenge on JD.com.
Just will not let it get above that 200 weekly.
So yeah, the trigger above that would be nice.
200, keep beating that stock down. I'd love it. Next, we got the last one, and let's go with Coach. Let's go with Coach Mark. Mark, you got lift.
Take it yourself.
Okay, I'll take it. Lift.
He's playing the Tim roll. He likes to hand it out.
I'm playing Tim's roll. Guys, I'm not great in the Tim roll. Okay, that's not my. I'm the analyst. I don't like being the Tim roll, but I can play it when I need to. So,
Tony Romo has a hard time being Jim Nance. Like Tony Romo's Tony Romo.
It is. I'm Tony Romo. Tim's Jim Nance. That's how it works. That's how it works. He's the play-by-play. I'm the color guy. Lift here. Tough on the trigger here on lift, especially when we had that breakout of 60. I believe what was it, about 62.5, 63. We had it on the scouting report about 3 weeks ago. I triggered into it. I believe Noah, you triggered into it. I got out on literally right before that down day in the market. I believe it was a weekend. I was a little concerned about the weekend. Tough to trigger here on lift in any capacity when you're stuck really in the middle of the range that you're seeing on lift. I think you got to see a breakout one way or the other before you look at trading lift here. Guys, that's been the Tackle Trading Halftime Report.
I came on to promote two things.
Yeah, go ahead.
I showed up to promote two things. One, we have the Tackle 25 group tonight. Tackle 25 are cash flow, covered calls, go over nothing but covered calls on Tackle
25 Mastermind group. Hey, 25. Guys, if I'm playing the Tim roll, I want everybody to write down Tackle 25. Everybody in the chat, go ahead and write down Tackle 25. We're having a mastermind group later on tonight. We're going to be going through all things covered calls. So make sure you're writing down in your notes. Make sure you're writing it down on your iPad. Make sure you're typing it into a Word document, and definitely type it into the chat. Tackle 25. How was that for Tim's roll, Blake?
It was perfect. On, and on Trading Justice Twitter all day long, I am going to be tweeting about Tackle 25 stocks. I'm going to be analyzing them, giving you my 2 cents on them, prep you up. I love covered calls. We love cash flow at Tackle Trading. So on Trading Justice Twitter, type in Trading Justice Twitter.
Type in Trading Justice Twitter, everybody. Type in Trading Justice Twitter. Mark, honestly, your Twitter feed's going to be gold, bro. You keep doing what you're doing. I love your Twitter feed.
And I'm going to be tweeting about Tackle 25 stocks all day, going over charts, looking at support levels, giving you my 2 cents, also giving you earning dates for all of the Tackle 25 stocks coming up. So doing your research for you like a good bird dog. And, I've been asking for feedback on Twitter on things they want to see. And Jimbo asked me to once a day pass on something I would pass along to my children as advice. So advice I would give my children for trading or investing. And today's advice that I leave my children once I die, do not smoke. However, do look to pick up cigarette manufacturers for your portfolio when the dividends are over 6% and the Fed turns dovish. So
I agree with that. Everything you just said. Children, if you're watching the Tackle Trading Halftime Report, do not smoke. It's a bad thing and it stinks. But in a recession, people love smoking, and that's what we're gonna end on with the Tackle Trading Halftime Report for July 10th, 2019. For Coach Gino, Coach Cody, Coach Mark, Coach Noah, we had a full crowd of coaches here. Hope you guys enjoyed the halftime report today. Give us a like, give us a share if you did, or vape. That's a great point there, Stephen, especially with that Juul stuff, right? We've seen the stats on that, Stephen. So don't do that either. Guys, I am heading to the airport right now to go hang out with some amazing, amazing people in Dallas, Texas, teaching for Legacy Education. So big shout out to Legacy Education as well. One of the greatest education companies out there in the world today, in my opinion. And until next time, guys, we'll be back with more tomorrow.